Now, analysts say the target set by the Central Bank of Nigeria to achieve major stability by May is rather too aggressive, stressing that the effects of the monetary policy decisions will begin to take effect in the later part of this year. Take a look.
I think Dangote diesel has gone to market. I understand that diesel has dropped in certain areas. It was at 1,450 yesterday, but I'm hearing news that it's touched 900 and 1,000 in the last 24 hours in some places. If that happens, then the logistics cost comes down. That's a major cost in the inflation equation. Now, if that happens, then we may actually begin to see a slight decline in the cost push factors. Coupled with the exchange rate appreciation, you're now buying inventory at a lower cost, so the average cost comes down. That might bring some succor, but not enough to withstand the minimum wage effect and the other things.
Yeah, we'll talk about the minimum wage in a moment. Ege, I wanted to come to you. I mean, there's been a lot of focus on foreign portfolio investors or inflows, bringing in that money through the auctions and all of that. But I wanted us to talk also about foreign direct investment, bringing actual investment into the country. That is something Nigeria is in dire need of. Where are we in terms of how much we're bringing in, or just what we're doing in terms of making the environment conducive enough for FDI, substantial FDI to come in?
Well, I think in terms of FDI, I don't know the exact numbers, but I know we're at almost multi-decade lows. I mean, there's nothing, there's very little positive news in that area, partly because of, again, macroeconomic stability issues, exchange rate issues, inflation issues, but also purchasing power issues. The average purchasing power in the country is declining, it's not rising. Per capita income is dropping in USD terms, and security issues are still there. So it'll take a while to get that foreign direct investment in. A lot of policy changes have to be made. There's some attempt in the oil and gas sector, but again, the trend seems to be reversed. Companies are actually leaving faster than they're coming in. One thing to bear in mind is, again, there's all this talk about tax, but you already have probably one of the highest corporate tax rates in the world in Nigeria. Your typical company is paying about 35% when you add in all the levies and all the different education tax and stuff. So who is running into a 35% tax rate country? I mean, the US and UK are much lower taxes than that. So there's some decisions have to be made as to what kind of economic structure we want. If you want real companies to come and set up shop here permanently, then they're not going to pay 35% tax. Well,
it's quite interesting because, I mean, when we go for, some of the roadshows we've gone to Dubai, events where the presidency use it as an opportunity to woo investors. I imagine that's one of the things they would have tried to sell, with the aim of bringing FDI. So, Kade, I wonder, what do we tell our investors when we go out on some of this at some of these events? IMF is coming up. IMF World Bank spring meetings in April. So I imagine when the Nigerian delegation, when we go there, what are we going to be telling our investors in terms of, okay, what are we selling, our comparative advantage, what they can expect in terms of the investment environment?
We need to show them we have a plan in terms of fiscal and monetary policy, working together to improve the investment environment. We talk about this ease of doing business, and we haven't really done anything about it. Our airport is still a joke. We have policies changing all the time. We have regulators seeing themselves as revenue-generating agencies rather than actual regulators, which doesn't help. We need to address those issues. And the monetary policy has started. We're expecting the fiscal policy to come in. I think in terms of tax reforms, we're hoping that the tax reform is not going to try and increase taxes, but just to make sure there's less leakage of taxes. We have so many agencies that are going around collecting revenue. I think the idea that there will be one or two agencies only that collect revenue, maybe FRS and stuff, having customs, collecting revenue, that was prevention of leakage. I think that's something that we need to do. But we need to have a focused plan that tells investors that, look, there's a long road to go, and we understand that. But we're putting the things in place to make sure that happens. And then you have that, then you also have to have the security aspect of it. That's where the Office of National Security Advisor and the police have to be part of that plan, because there's no point talking to people about mining or agriculture and stuff, and farmers can't go to their farms.
The headlines we see these days certainly don't help.
They don't help.
But in terms of what they're going to be telling investors, we've done X, Y, Z. I know at the top of my head, obviously we've strengthened the naira, we've sort of cleaned up the FX market.
They'll say they moved FX to a willing seller, willing buyer market. So they've removed a lot of the FX, which is fine. Although when you then listen to the fact that they've now told IOCs that they have to keep their money for 6 months in the country, that kind of brings some kind of capital control back in through a back door. So, I mean, they will show that they started certain things. Investors generally say, great, but we need to see a longer period of these things embedded and also see additional things come in place for us to bring that FDI. But if you want us to bring hot money in and get your high interest rates and come in and out, yeah, sure, if you're paying us 30%, we'll do it.
Why not? Obviously, yeah.
I think one thing to bear in mind, just starting from what central bank has done, they've gone from the point of view of competition, right? You have to compete for money globally, and they've just upped their numbers.
Can you blame them? I mean, U.S. Treasury, over 4%.
So they've just upped their numbers to be able to compete. That same philosophy has to be applied to other sectors. I mean, Nigeria is great, but there's so many competing countries. If you look at oil and gas, 40 years ago there was no oil south of the Sahara. Now, everybody has oil off their coast. So the competition level has changed, and whatever is being done, it has to be crystal clear that come here, you get a better deal than going anywhere else. That message is not as clear right now. It's clear for treasury bills if you're getting 27% in an appreciating currency. That's fantastic. Oil and gas, manufacturing, all other sectors. How clear is the sales pitch to people that have options?
All right. So Bismarck, we have just about 1 minute left. So closing thoughts from you. Like Iggy said, I mean, we're clear on treasuries in terms of how we're bringing hot money in. We're not clear on other sectors. What do we need to do? Because what we hear the fiscal authorities say most of the time is, the environment is conducive, just bring in the capital, legal, whatever, ease of doing business. It's all, we're working on it and we'll support you in all the ways you need to be supported. Your thoughts?
I think the time horizon, investor time horizon and the host government's time horizon have to be synchronized. All these short-term gains, and you have the electoral cycle coming up short. Long-term investors have an horizon that is much longer, and they want to see structural reform. They want to see commitment reform. They want to see less inconsistency. So that message going to Washington in April, you have to come up with a message that is consistent, coherent,
cohesive,
and then make sure that the horizon, if you're looking for short-term hot money, that's good, but it goes out as fast as it can with more casualties. So that, and then the coordination of all of these policies, and the fact that a revenue problem is clearly defined and distinguished from a growth problem, and the strategies should be that way, probably well coordinated.
Okay.
So there's a story to tell, but it has to have a long-term view.
And that was Bismarck Rouani, the Chief Executive Officer of Financial Derivatives Company, Egi Akpata, the Chairman of SkyMark Partners, and Kaude Akindele, Chief Executive Officer of Coronation Capital, sharing their thoughts on the latest move we've seen from the Central Bank of Nigeria.